Hey, what's up, everybody? All right, today, welcome back. Hope you guys had a great weekend. Today is Monday, August 23rd or whatever the hell it is. Yeah, 23rd. Time for another weekly update on the S&P 500 earnings and Tsp Fund and TSP in general kind of stuff. All right, so I'm going to have the slides available on the TSP Facebook groups. So those of you guys who just want to get a quick little look at those, you can. If you want a better explanation of what information you see on them, then that's what this video is for. Or if you're only watching through YouTube and not through Facebook. So that said, let's go over some of the details of last week's earnings, top 100 earnings, and this coming week, and basically where is the index sitting at right now. All right, guys, we're going to start off with stuff that is more interest to the general TSP population first, or general investor population also, if you will. I'm going to go over the S&P 500 price targets and all that, like usual. After we get past this slide here, we'll move on to the more, as usual, more into the individual stocks, the top 100s and the S&P, and what's going on with those for those of you guys who invest outside TSP, whether it's an IRA or through a regular TBA account. All right, so let's start off with where the S&P 500's current value is right now. As of this last week's earnings, it is I currently value the index at 4,300. That's up 5 points from last week. Now keep in mind this is only trailing earnings, doesn't factor in forward estimates. These 1, 2, 3, and 4 quarters ahead part do factor in the forward estimates, and those give you kind of an idea what to expect looking forward and what those have changed by over the last week as well. All right, so right now the index topped out at had a record high of 4480. I think it was early last week or late the previous week. It did drop not too far, maybe a couple of about 2% or so before rebounding, and it's back in record territory today. It was up to getting closer to 4490. Earlier this morning, it was just a hair over the previous record, 4480, right before I started recording this. All right, so we're looking ahead, the future earnings. The biggest jump we're going to expect will be over the next couple of quarters. Next quarter, or basically 3 months from now, basically, this 4,300 I expect to go up to 4,530. That could go up even higher than that, but it's a good 230-point jump. It's no change from what I had on was that what I was expecting last week. And then 2 quarters ahead, or 6 months out, currently projecting it to hit 46.95, which is down 5 points from what I had last week. All right, same case goes for 3 and 4 quarters out. It dropped 5 points from last week's numbers, but it's still going up nicely, 47.90 and 48.15. Basically, what this means is that 3 and 4 quarters out, don't expect it to grow very fast. There will be a lull in earnings growth, and we can expect a kind of a lull in price growth as well. Doesn't mean we're going to have a recession, but I do expect that the rate of growth is going to slow down. It could speed back up at some point after that, but just kind of a pause point, if anything. Unless things change. 12-month price estimate, basically a year from now, where I think based on this current growth trend, the S&P could actually hit 50.75 level. So it's down about 10 points from what I projected last week. All right, the ideal trading range for those of you guys who are short-term traders or just want to know where the index should reasonably be priced right now before expecting some short-term chop or something, is 4,400 to 4,560. Our price today is right inside that range, actually right in the middle of that range. So good there so far. We'll see where it tops out again. I was actually considering making some adjustments to my calculations here, but with it already rebounding and starting to hit record territory again. I think I'll wait to see what it tops out at again before making any adjustments to my formula here, or that creates this number. All right, so last week, all the companies that updated earnings basically reported enough earnings to create a plus 12-point increase in the current value, or this number here. Last week, I was only expecting 10. It's not much of a difference, but it's still an outperformance over what I was expecting. And remember, we had a smaller sample size of companies reporting last week, so I think there was only 18, 19 or so companies in the index that all week long reporting, regardless of size. So there's not much to work with there, and you'll see more impact when we get to the busier part of earnings season. When we get to where you watch these numbers here when we get there, I'll talk more about that. All right, so far this quarter, we had 466 of the companies report earnings. That's 92.3% of the index. That's a significant number of companies in there. And as you see over the next 4 weeks, it's going to be very, very slow as far as the volume of companies reporting updates over the coming weeks. So don't really expect much movement there on the earnings price targets here as far as over the next month is concerned. Maybe once it starts to pick up, which will be probably in the mid-October when we really start seeing it pick up the pace to well over 50 and even over 100 companies per week. That's when you will really start to see some movement more, or when they first start to come in, when the activity starts to pick up down here on the bottom end of this 4-week projection. That's when I would start to expect to possibly see more of the speculative trading activity, where prices could start getting pushed upward or downward based on speculation on earnings instead of not quite as much on technical trading or chart patterns or actual earnings data that's actually coming in. So it's kind of a cycle there. Who's in play right now? It's going to be the technical traders, I think, who are going to have control of the market, and then next month I do expect it to shift a little bit more to the speculators, and then October will probably be more of the fundamentals-based investors. All right, but the percentage of the companies that are reporting positive growth this quarter is 88%. Again, that's a staggeringly high number. That is a lot of participation in growth. If those of you guys who were around in the who were paying much attention to the stock market during the dot-com bubble back in 2001, 2003, somewhere in that, whatever that time frame was, might know that there was a lot of talk about how only a few companies were propping up the entire index, and that was when really the economy was on shakier legs than that. All right, and that's what we want to look at with this is how much participation is there in that growth. 88% is one of the highest numbers I've ever seen since I've started reporting this data. All right, and just for this quarter alone, since July 1, the earnings that have already come in with these 466 companies have pushed my current value up almost 500 points just this quarter. That's a huge, huge jump. Again, we're going to expect maybe half that over the next 3 months, but it's still healthy. But don't be surprised if we see the pace really slow down, and that could create some opportunities for swing traders too, for those of you guys who like the short-term game. Weekly earnings are expected over the next 4 weeks. This coming week, we have 13 companies reporting. No major companies reporting today. Actually, I don't have any companies in the index at all, regardless of size, reporting today. But I will cover some more on the top 100s later on a later slide. But these 13, I'm only expecting to have a +2 effect on this current value. So I don't really expect this 4,300 to change at all. Or it might go up to 4,305, depending on rounding, what happens next week. But Don't really expect it to go above 4,300, 4,305 by this time next week. And then next week, we'll have 9 companies with an expectation of a +4 effect on current value. 6 September through 10 September, only have 2 companies reporting, but they're expected to report a very, very slight decline in earnings. Less than 1, basically a 0.0, basically a less than 0.5 point effect overall between the two of them. So it's really a -0. And then 13 through 17 September, only 1 company expecting to report, and it's going to round to about +1 effect on current value. So over the next 4 weeks, the total expected change to current value is only going to be +6. So over the next month, that means don't expect this 4,300 to change to anything more than maybe 4,305 to 4,310, somewhere in that ballpark. As I mentioned, there's not much there for earnings to drive prices higher. So at this point, it's going to be the technical traders until we start getting into the area where it starts getting closer to earnings season and start getting the speculators coming into play. Right now, the expected stock earnings yield for the S&P 500 is 11.98%. I believe I had it at 12.29 or something like that last week, so it is coming down a little bit more. It's still healthy. It's still double-digit gains. It's still something I'm okay with, and it's still a better investment than the bonds, as you see here. 10-year Treasury note is only at 1.26%, which implies you're not going to get much out of bond funds at the moment. So for that reason, I still recommend a 90-10 stock versus bond mix for those of you guys who want some market-sensitive diversification. All right, so as this yield drops and then as this yield goes back up, now you're going to see this recommended stock bond mix shift more toward bonds progressively. So those of you guys who are more market sensitive, if you really are concerned about recessions and stuff, watch these numbers here. If you start seeing it shift more toward bonds, then go ahead and start shifting more of your money toward bonds. And that way you have as much of your money in stocks in play as you can when it's a good time to be in stocks. And then when the risk factor starts to go up a little bit more of something not so good going on with stocks versus bonds, you'll already have your money in a position to buy for the bonds to perform well. All right, that covers all of the broader TSP information for you guys. So if you guys are only interested in the TSP specific information, this is a good time to, if you want to stop watching, you're welcome to. For those of you guys who invest in IRAs or individual stocks and you want to get some ideas on what may or may not be good buys or sell or hold or whatever in the S&P 500, we'll be covering that in the following slides. All right, so moving on here, we got last week's top 100 companies. I think we had about 10 or so companies overall in the top 100 report last week. The largest of them was NVIDIA with a $543 billion market cap. They reported earnings of $104 per share versus 55 cents the same quarter last year. All right, so we want to compare earnings from the most recently reported quarter against the same quarter a year ago, because companies do tend to be cyclical in nature. For example, being H&R Block, they get all of their earnings in tax season. Or one of the companies here you're going to see later in this presentation here, even when I get to it, I'll try to remember. It might be NVIDIA, but I think it was another one. But one of them has I think it's one of the others. Their earnings really take off during the holiday season, and it's not the ones that are here on the screen. But anyway, we don't want to take too long with this explanation or too much sidebar. So let's go on with what else we're seeing here. All right, NVIDIA, their trailing 12-month earnings so far is at 347. As you see here, their earnings are expected to grow in each of the coming 4 quarters. That's a good sign, and it's good. It's double-digit growth percentage-wise that it's expected to do. So double-digit percentage growth and a nice step-ladder trend like that is going to get me a 5 impression, which is a strong buy. Doesn't mean that they're going to be a great buy, but just screening alone, this is worth looking into. Basically, if you're looking for something to buy and you want, maybe you're looking for a tech stock, Nvidia is worth looking at. Walmart, WMT, they have a $422 billion market cap. They reported earnings of $1.78 per share versus $1.56 last year. The trailing 12 is 620. They're kind of, they're going up 624, 632, 627, and 631. It's kind of up and down, but generally up. I thought about giving this a 3.5 rating, but the percentage-wise growth is just not there, or at least not what I'm expecting. If I'm only expecting like 1 or 2% earnings growth out of them, which is about what that amounts to, it's just not worth buying the shares of them. They might be worth holding, especially if they're dividend-paying stock. I don't remember if Walmart is or is not, but just for you guys to know, just because it doesn't look like it's a good buy doesn't mean it's not worth keeping in your portfolio if you already have it. So that's something else to remember. Also, they can outperform earnings over these next 4 quarters. So these are just, again, just little screeners to help you get ideas on what you might want to pay attention to or what you might want to avoid. All right, Home Depot, HD, they have a $349 market cap. 453 versus 402 last year. Trailing 12 is 1422 per share. And they are kind of going sideways as well. 1437, 1454, and then back down below their current earnings. Down to 1410 and then back up to 1443. So they're kind of going sideways there, and because of that, I call them a hold. I wouldn't be too interested in putting my money in them personally. All right, also, before I go into Cisco, I do want to point out just to give you a kind of idea is if you're concerned about share prices, which you really should not be, you should be more concerned about what percent growth you can get out of your money. It doesn't matter if you buy $1,000 worth of $1,000 stock versus a $10 stock. You're still putting $1,000 into play. If you might only get one share of a $1,000 stock, while you can get 100 shares of a $10 stock, but that doesn't mean that the $10 stock is going to be a better buy for you necessarily. A higher share price might just mean that they have more concentrated earnings per share. Basically, they don't have so many shares available to sell to the public, and they might still be a stronger growing company. So don't use share price as a gauge to tell how big a company can grow. They also do stock splits at times that can cause the share price to get cut or even multiplied by whatever amount they're doing a split by. But just in case, if you're maybe limited on money to start investing with on regular stocks, the lower earnings per share are more likely to get you lower share prices as well. So something else to keep in mind here. If you see something that's rated a 5, it may be relatively lower number like yours, 347 versus the 1422. Nvidia's share price is probably going to be quite a bit lower than Home Depot's, just by looking at the trailing 12 earnings alone. All right, so moving on to Cisco, just kind of go real quickly over that one. You guys have an idea from these other 3 now how I'm reading these and what they mean, I hope. If you're not quite sure still, don't hesitate to ask. But Cisco I have as a 4, which is basically a buy. It's not a strong buy, but it is a buy. It is projecting upward consistently. It's just not strong enough percentage growth to be the first thing I would look at. They're worth having. They're worth buying into, but you can get better performance out of other stocks, in my opinion. At least for the time being. All right, next we got Lowe's, Target, Estee Lauder, and Applied Materials. They're kind of all over here. We got Lowe's as a 4, which is a buy. Target, which is a 2.5, that is a hold to sell. Basically, hold to weak sell. Again, that's one of those. Just because you see it, it's a weak sell doesn't mean it's necessarily a reason to sell them. It just means that I wouldn't necessarily be buying shares of them unless you're a contrarian investor. Most of you guys don't know how to do the contrarian game. If you do, great. But most of you guys, I expect you're probably going to be more of a momentum type strategy, if anything. So let's keep that in mind. All right, Estee Lauder and Applied Materials. Those are both strong buys, at least on these earnings impressions here. Again, they're projecting upward consistently, and it's double-digit growth. So where there's double-digit growth is usually a better place to put your money if you're looking for better performance. All right, last two here, Deere and Company and TJX. Those are also going to be strong buys for based on the earnings data here. Both also looking consistently higher every quarter. That's good signs there. Okay, then breaking those companies down by rating. Got the strong buys, got NVIDIA, Estee Lauder, Applied Materials, John Deere, and TJX or TJ Maxx, whichever. TJX company is basically the name of the company, but TJ Maxx stores are what they are. All right, and then weaker buys, or well, regular buys, whatever, are Cisco and Lowe's. And then holds I got for Walmart and Home Depot, and then hold the weak sell is Target. All right, this coming week you got kind of another. It's going to be a slow week. As you see here, only got 3 companies in the top 100 expected to report at all this week. Nothing going on today. Tomorrow we're going to have Medtronic, MDT, and Intuit, INTU, reporting. And then Wednesday got Salesforce.com or CRM. And then after that, be nothing going on Thursday and Friday when the top 100. There may be other companies reporting each of those days. I know there's nobody reporting today in the index, but outside the top 100, there could be other companies also adding to the pot. In fact, I was expecting 9 companies, I think it was this week. So got 3 top 100s and 6 that are outside the top 100 or smaller companies. All right, lastly, we're going to cover the Tsp Funds themselves. Give you kind of an idea. Now, if you're in the groups, you probably see, you more than likely can see Deb's daily posts on with these same numbers or generally same numbers. What I really want to show here more is trend analysis. I want this to supplement what information she's putting in the groups. It's more to help you figure out, if there's any strength developing in certain areas. Like recently, iFund looked like it was doing pretty well, but really didn't do a hell of a lot. It was just still poor compared to the other funds. And it's dropped back down last week. And now Tsp Fund has the momentum again for the month. For the week, it's been kind of best performer by committee per day, every day. So Monday, the 16th, the best performer was F Fund. And then Tuesday it was G. Wednesday it was G. And out of the stock funds, iFund was actually the best of the stock funds. No, actually, no, it was F Fund. All right, so C had Monday. I forgot that I don't track G Fund in here. But as you see, it's been kind of a performer by committee there this last week. But over the year, Tsp Fund is still the top performer. CS Fund's been kind of losing a little bit of ground again there to Tsp Fund. Now, we'll see if that changes. I don't know. It still looks very strongly like Tsp Fund's the place to be, though. Now, that's going to wrap up this presentation. Hopefully, it was a little bit quicker than the previous ones. I don't know. But regardless, it's got good information in here, I hope, for you guys. Hopefully, you find it useful and you make good moves because of it. I do need feedback, though, see how things go. And I don't mean feedback and it just, one day or 1 week later, you're losing money. It doesn't tell me anything. Hold on to that stock for like at least a quarter or something and then see how things go. Any kind of feedback, because I don't personally invest in all of these stocks. And anything to help give me good information on how accurate, how useful this information is, and how is it actually working out for you guys if you are making moves based on these screens here, might help you out there. All right, so that's all I have for the week, and we'll have some more info next weekend for you guys. All right, thanks for watching. We'll see you guys next week.